Welcome to the Prudent Pulse. Now, amid a torrent of distressing global events, from ongoing conflict in the Middle East to politically charged developments here at home, it may seem surprising to some to see the S&P 500 pressing toward a new high near 7,000. Yet despite the volatility of today's headlines, economic momentum in the US has clearly turned upward. Now, in the third quarter, the US economy grew 4.3%. That was way above the 3.3% that analysts had forecasted. Most of that growth is attributable to continued strong consumer spending, and this was evident over the holidays. Based on retail monitor data, holiday sales from November 1st to the end of the year rose 4.1%. That came in at the high end of the forecast range. Now, while the economy is growing briskly, the US fiscal picture is also improving. The budget deficit shrank 2.8% in 2025, and that marked the first deficit decline in a decade, excluding the outlier COVID years. Now, a combination of spending cuts, additional money from the tariffs, and increased revenue from higher wages decreased the fiscal gap from 6.4% in 2024 to possibly below 6% in 2025. Furthermore, analysts are forecasting S&P earnings growth of around 12 to 15% for this year, and that will buoy stocks, and oil prices are hovering near four-year lows, which is keeping inflation relatively at bay. Now, one of the few economic black marks, though, is poor job growth, and that's the weakest it's been outside of a recession in a couple of decades. Those concerns are somewhat pacified, though, by low layoffs, and a recent spike in Q3 productivity means that companies don't need as many people to get the same amount of work done, and unit costs have even been declining. So there are clearly some economic tailwinds. We just have to hope that geopolitics doesn't undermine this current growth cycle. And that's the Prudent Pulse.